Good afternoon, everybody. On Saturday, the 22nd of August, looking at an end of the week recap of what we're doing, where we are, end of options expiration cycle, where we are. We use monthly charts to show the greater trend. Very, very, very strong, no doubt. People like me that have been talking about the too far, too fast move, not so much since March, but especially since July 7th. All of us look like complete retards and colossal idiots about now. But here we are. Let's talk about where we could be going. Based on yesterday's options expiration move, the next resistance on the Dow in terms of the minor cycle, 9,605.78, about 100 points before we are, about 100 points above where we are right now. If that gets taken out, there's no more resistance until 10,092.52 on the Dow. That's right, a 4,000 point bounce off of the bear market lows in March of this year. Right above there, a 5-year simple moving average would take us right again near 11,000. Support on the way down from here, there would be 94.37 support, which was the last high on a daily basis before yesterday's breakthrough. But on the major trend, support is really 500 points below at 9,043.42 for the Dow. Time segmented volume on a monthly basis set to a 1-year period, a 12 period, just now coming up through the zero latitude line. Money stream coming up through linear regression resistance and also just crossed 1-year resistance on the Dow 30. Over to the NASDAQ composite, hitting its head. One second. Might help if I have the right chart up. The composite is just now crossing July highs by about 7 points, and it's also struggling with a major diatonic at 2013.64. We closed a bit above there yesterday. If that cracks the 50% of the entire bull market from October of 2007 to March of 2009, the 50% mark for the composite is 263.51. An area where there'd be an equal amount of winners and losers in this battle. If it gets above 2063.51, and I don't think it can, the number's way up at 23.28 for you Bullwinkles that think this rally's never going to end. That would be your wish mark up there. But that 2063 is going to be rough, and as long as I'm talking about 50% bounces of the bear market, the Dow is nowhere near 50% and the S&P 500 is nowhere near 50%. The only one that has crossed that 50% battle line for now is the NASDAQ 100. Time segmented volume on the composite on a yearly basis coming up through the zero latitude line. Money stream fighting its last area of resistance in linear regression for the NASDAQ composite. The NASDAQ 100, the big winner in all of this, as we talked about a couple of weeks ago, got exactly to its 50% retracement of the bear market, and that number was 1629.04. In fact, it closed less than a point below that on its high back in the month of July, right at the 50% bounce. We're now 8 points above that, and interestingly enough, we stopped yesterday on options expiration right on that 5-year simple moving average. If it gets through where we are right now, hell's bells on a greater trend basis, the number's all the way up at 1831.62. I think you'd have to be smoking crack to expect that number. But I reserve the right to be wrong. Immediate support below where we're trading right now on the NASDAQ 100, 1590.90. And if the sellers come in here after Labor Day when they get back from the beach, they could drive it down as far as 1425.24 for the NASDAQ 100. Time segmented volume above the zero line but getting flat. Money stream still look like it's swimming for the surface well through all resistance for now. on a yearly basis for the NASDAQ 100, home of the triple Qs. Finishing up with the S&P 500, on a minor cycle basis, when it got through that 1018 last high on the SPOOs, it opens up next resistance about 10 points above here at 1036.85. However, if it gets through that on a greater trend basis, and we're talking about the bear market, October 07, March 09, if it gets through that 1036, no more resistance until we get up here into 1093.02 on the S&P 500. What a run that would be. Support below here on the S&P 500 now, greater trend support is down around the 969.58 area on the S&P 500. Time segmented volume cracking out the zero latitude line on a yearly basis. Money stream not as strong as we're seeing in the other indices, but still making a good angle of attack nonetheless. We'll hit some greater trend linear regression on money stream right about up there. Alright guys, I don't see a point in getting stock specific for this video simply because most of the moves that happened yesterday I believe were options expiration moves. And any of the stocks that I'd be talking about, your Apples, your Googles, your Goldman Sachs, your MasterCard, and so on, you know, the main basket that we like to focus on, the Lemming 20, as I like to call them. I want to go back and illustrate something that Don Warden is saying in yesterday's report. Don Warden, one of the pioneers of technical analysis with over 50 years of experience in doing this. And he's likening the situation that we're into currently to what happened in 1937, which was known as the rich man's panic and is worth studying. But here's the main points of his discussion. Here's the Great Depression October crash that started in October of 1929. The beginning of that bear market did not end until July 9th, 1932. Beginning to end, that was a 90% drop in values on the Dow 30. Now then, from that bottom in July of 1932, we went up 342% into July. I'm sorry, I don't know the month, but the top of 1937. And everybody was so bullish and so cocky, and the news was so good, it was never going to end, that all of the sophisticated investors got in with both hands, and we're off to the races, and it's going to be blue skies forever. Well, what happens over just a 1-year period? This is the rich man's panic. All the way back below 1929 levels in that crash. All the way back to it in 1 year. It took 3 years from 1929 to 1932. 1 year to wipe it out. Does that sound familiar? Like October 2007 to March of 2009. And then even after that, it went another 40% lower into 1942 before that finally ended. The last video I did last week, I was talking to you guys about wave 1 down, wave 2 up, which is where I think we are right now, and wave 3 down is going to be a hell of a lot worse than wave 1 down, point in case history never lies. The media says the recession is over. Your administration says the economy is going to be booming with $9 trillion in deficit. Credit is contracting, not expanding, but it's all good, and we're going up, 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 up. Keep smoking whatever you're smoking. I know I've been talking like this for months now, and I've been wrong. I'm not telling you when it's going to happen, but history often repeats, and when it doesn't repeat, it also rhymes. So those that know history can avoid repeating it, and just enjoy your longs while they're happening, but wait for that trap door to open and be prepared when it does. I am King Cambo. Smoke 'em if you got 'em, and that's how I roll.